right? Real estate leases are capped at CPI. So if the CPI is 2% and the real monetary inflation rate is 7%, it's very difficult to raise my rents that fast. It's very difficult to raise my prices that fast. It's very difficult to raise my value, my revenues that fast, and the cash flows that fast. So ultimately, what you have is an example where the monetary inflation rate is benefiting people that own a scarce asset like Bitcoin and is undermining the other assets. And so instead of focusing upon currency, because there's $900 trillion of wealth in the world, you only need 30 trillion to 60 trillion of working capital to basically trade high frequency to buy things, etc. The other $850 trillion is invested in real estate, bonds, stocks, collectibles. So you see, if Bitcoin is the strongest asset, then what's going to happen is people are going to say, I'm not going to invest in real estate and value it at 25 or 30 times rent. I'm going to value it at 10 times rent. And so maybe I've overvalued the real estate by a factor of 2. And so I sell the real estate and I buy Bitcoin. And I'm not going to value the S&P index at 25 times earnings. I'm going to value it at 12 times earnings. And I'm going to sell the S&P index and buy Bitcoin. You see, as we demonetize, I'm not going to value the bonds. Why would I hold a bond that yields 3 or 4%? If I get paid 5% interest after tax, it's 3%. So you're getting 3% after tax, return on a bond. And if Bitcoin returns 14 or 15%, then why wouldn't I sell some of my bonds and buy some more Bitcoin? So what you have is capital. It's flowing from the weaker assets to the stronger assets. In weak countries where there's hyperinflation, the currency collapses. Well then, what happens is I sell my pesos and my bolivars and I buy dollars. Okay, and so you see that on the edge of the economy where I'm trading the weak currency asset for a strong currency asset. But don't make the mistake of thinking that's the right idea. That makes sense when you're in a crisis situation, a hyperinflation situation. For most of the people that live in Japan, in Europe, in the United States, in the developed world where there are healthy economies, in the Middle East, there the right trade is you trade your weak assets or your currency derivatives for non-currency derivative, for the strong asset. So what are things that people value not based on cash flows? Like a Picasso painting, a franchise, a trophy asset, the middle of the city, 10 acres in Palm Beach, right? Beachfront property. Things that the reason that real estate in Miami Beach goes up faster than the CPI is because you can't make more linear beachfront real estate in Miami Beach, right? It's like there's 8 miles or something, and you can't make it 16 miles or 36 miles. If the government could somehow bend dimensions and create 1,000 miles of beachfront property, then beachfront real estate wouldn't be a good investment. So you see here, I'm not, all of the Bitcoin haters, they always jump on top of this. It's not a good currency because, it's volatile and because people sell you things in it and you can't buy things with it. And they have basically brainwashed and straitjacketed themselves mentally by picking the wrong model. And the right way for them to think is, if I gave you $100 billion of real estate in Africa, and if every country was unstable in its government, and if the people that ran the country didn't like you, would you keep the real estate in Africa or would you trade it for Bitcoin? And once you get that idea through your head, if you lose confidence in the policies of a government, or if I gave you $1 billion of stock in a company, but the CEO was crazy, would you keep the stock? or would you trade it for Bitcoin? When you lose confidence in an executive, when you lose confidence in a company, when you lose confidence in a country, when you lose confidence in a currency, most of your wealth is tied up in the real estate and in the assets in the country